Welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages.
Summertime now, man.
It's getting there.
Finally, the rain stopped. It's been a wet spring, which was good.
We needed it.
We need it because, climate change is causing forest fires,
Yes.
right?
Right. Doesn't this conversation make you feel so old when the weather comes up? Like, oh, we needed it.
yeah. The farmers needed this. Good for them.
Yeah.
Yeah, no, it's true. Well, I've grown up in a farming family, so it's like always talking about it. This kind of weird stuff, and then you mix in the weird ones, like when there's a lot of berries on the bushes in the fall. Gonna be a hard winter. What?
You're like, how does that equel that?
Well, no, it's because the bears need more fuel to hibernate, so nature is helping the bear. It's like, okay, sure.
We'll roll with that. You believe that.
Honestly, that same level of superstition and randomness, I think, is how the economic data is produced these days. The Farmer's Almanac, the writers of the Farmer's Almanac is now in charge of producing the jobs report in Canada.
Right.
They just stick their finger up, and they're writing numbers down on paper based on...
Inflate it with government positions.
Yeah.
Yeah.
Oh, a new movie started in BC, and they're going to employ a couple hundred people for 2 months.
Yeah.
Positive, positive growth. Yeah. No, that's all the other podcasters I like and listen to like literally label the jobs report as the random number generator.
Right.
Yeah. So, quite comical there, but I don't think that's what we're talking about today.
No, not today. Today we're talking about debt.
Yeah.
Because there is some major runoff. What I feel like is from COVID. Yeah. People haven't slowed down on spending, and everything has increased in price. And so that's led to a lot of extra debt.
Yeah, definitely on the applications we're seeing right now. Debt loads are higher. This was forecasted, with inflation, just everything costing more. I can speak personally. I mean, we made changes. We're using instant cart, so we're not tempted to go, run wild in the grocery stores. Because I'm a shopper.
Yeah.
I love cooking, and I go up and down every aisle and buy whatever.
Oh, I could make something from that.
Yeah.
Yeah.
And then I'm jumping all over the store to collect, the things I need now to make that dish. Yeah. And but I'd consider it a hobby of mine, and it brings me joy.
Mm-hmm.
I'm not doing that as much, to be honest. We're using Instant Cart. We stick to the list, So I think even with those slight modifications, people are still falling behind just because it is so expensive. And property taxes, utilities, and gas, all being major players in that, you still need to drive to work.
Yep.
You still got to, get there. And all those things have piled up.
Yep.
So definitely debt loads, we're seeing it.
And I don't think people realize how much it impacts the application, right?
Yeah.
Like there's certain rules we have to follow. Like, for example, credit cards and lines of credit. We don't get to use their minimum payment. No. We have to use 3% of the balance.
Yeah.
So they're assuming like, oh, it's a minimum payment, no big deal. Like, nope. We've got to use 3% of the balance, which has a huge impact if you're carrying around $20,000 on lines of credit and credit cards.
Yeah, which is very common right now. Like, if you're listening, and you're calculating how much debt you're carrying from month to month that isn't getting paid out, $20,000 is easily a consistent number that I'm seeing.
Yeah.
But always back to car loans. Car loans are always, the biggest expense usually.
Yeah.
We just ran the numbers before coming in here. Just to put it into perspective, an $865 car loan, if you did not have that one expense, you would qualify for an extra $120,000 in mortgage.
Mm-hmm.
That's the difference from getting a row house starter home for $300 versus a detached single family in great community like Fort Saskatchewan or now all of a sudden, like, that's the jump.
Yeah.
You know, so those car loans are, you know, always a problem, always will be. I don't think there's any discussions on how to, you know, lobbyists trying to minimize the regulations on or access to car loan debt.
Right.
Nobody talks about it in Canada. Like mortgages and housing, always under the microscope. How do we protect buyers, the market, the economy? That's always under the microscope, and it should be. It's an important piece of our economy. But car loans, I don't know. I don't hear anything about how do we, you know, regulate the amount of car loan you can get versus, you know, annual income.
Yeah.
We see auto loans above a person's annual income all the time.
Yeah.
All the time.
Yeah.
So yeah, that's the one piece. So.
And you might be thinking that $865 a month is big, which it is. But I've seen car loans as high as $1,300.
Oh, all the time.
And it's like
every month I'm seeing several.
Yeah.
You know, car loans of that size.
And I'm sure there are different circumstances where somebody needs a special truck with a welding rig on the back. Different. But chances are you do not need that brand new $100,000 vehicle.
Those Wagoneers, man, beautiful.
Yeah.
Beautiful car.
But do you need it?
Yeah.
No.
Yeah.
You don't.
Yeah. So debt, I think that's one thing we can always harp on. It's always going to be topical. It's always going to be relevant. And it's always going to help people buy a house. Is preparing your debt load in advance. When prime comes down, when that market softens, consolidation loan rates should improve. Personal lines of credit will also improve.
Yep.
Like, so people can maybe bundle up that higher interest rate debt, like credit cards especially.
Yep.
And do those consolidation loans and get that into a better monthly payment that has some principal pay down.
Right.
So I'm hoping that, you know, the interest rates drop, not just on the mortgage front, but that will also affect the personal loan front.
Yeah.
Because right now, a personal loan, like to go and buy a used car or a consolidation loan, like you're in 8 to 10%.
Not more.
If not more.
Yeah.
11%.
Yeah. So
that's hard. Like that's a big number.
Yeah.
So yeah, I think mortgages, obviously that's the business we're in. We want to see affordable mortgages, but we also need to see people being able to afford reasonable consolidation loans.
Yeah.
And get that part of their finances corrected. So when that happens, I think again, the housing industry will benefit. People will be able to qualify for more. So you know, because $20,000 in credit card debt, you know, we have to apply a $600 a month payment to that.
Yeah.
In a consolidation loan, for example, that might be a $400 a month payment.
Right.
So now that's $200 delta there that can be allocated to mortgage and not credit card debt, which would to 12. That would easily then generate maybe another approval amount, another $15,000 in buying power.
Yep.
Is that right?
Around there.
12, 24. Yeah. So, you know, it all adds up. It all helps. And not to mention just the cash flow perspective.
Yeah.
So.
And like, it's not like we're trying to say, don't ever take out a car loan. There are situations where you are put in a position where this car breaks down, you don't have the cash, you have to take out a car loan. But there is a little bit of strategy there. Does it need to be that expensive one?
Yeah.
And another thing that I've seen is people trying to squeeze the intensity or how short they want the car loan to be, which jacks up the monthly payment, which then so like if you can get a $400 a month instead of $700 or $800, I get that you're paying the car off over a longer period, but now it makes the mortgage side of things easier.
Just all depends on what you're trying to do during that period of time. Being cognizant of it. The hardest is when people make a car or a decision on a loan, car or otherwise, RV, whatever. And then it comes time to buying the house and they realize that they put the cart before the horse. And then there's that regret, and then that sucks. Like that, that's, you know, you feel for those people because in reality, can they afford it? Yeah, because, you know, you buy a holiday trailer because you're saying we're not going to our annual Hawaii trip.
Yeah, we're not doing the
big trips.
vacations.
We're not going to Disneyland. We're going to stay closer to home.
Yeah.
So I can justify, we're not doing the family trip for 10,000. We're going to camp. We're campers now, and we're going to stay closer to home. And that's how we're rebudgeting our lifestyle so that we're still enjoying life.
Yeah.
But that loan to accomplish that agenda has now kind of put your home buying, in jeopardy a little bit.
Yeah.
So it's hard because that person is making steps to adjust their budget and still give their kids a summer.
Yeah.
So it's tough. People are feeling it. All middle class. I feel like there is a divide that's growing.
Yeah.
Poor people, lower end, are feeling poorer.
Yeah.
People that were really feeling comfortable, middle class, are feeling like maybe they're not there anymore.
Yeah, the spread between the wealthy and
It's growing.
is exactly.
Yeah, I truly feel like it is growing. So yeah, I think during these periods of time though, if prices come down, when affordability returns, people that have money that survived and weathered this storm are in a different position to benefit than the person that's maybe fallen out of the middle class into the lower middle class because they are paycheck to paycheck now.
Yeah.
That's a new experience for them, but they are not anywhere near in a position to capitalize. That's why periods of time, Vanderbilt's, all these amazing families that have developed themselves as iconic names, made a lot of money during depression eras.
Right.
Because they were positioned to gobble up assets when others couldn't.
Yep.
When things are cheap on discount, cash is king.
Yep.
So I see that. I see that happening right now.
Yeah.
So that's the advice. I'm taking my own, medicine on that. I want to make sure that I'm positioned with some liquidity.
Yeah.
And can act in the future, whether it's this year, next year, maybe it's 2026.
Yeah.
Just to be prepared.
Yeah.
In case opportunity presents itself.
Yeah. We did somewhat the same thing in terms of idea, knowing that, because we just moved last year to Red Deer. So we had to move, and we knew that this upcoming couple years was going to be tight with everything was going to get more expensive. We downsized a lot just to be safe.
Yeah.
Not saying it doesn't have to be our forever home, but took a huge, low purchase price so that we could.
How do the girls adjust to that downsize? They don't care.
No, every once in a while they'll say our basement was bigger in our old house. It's yeah, it was. There's not much room to bike around in a circle or whatever. But besides that, no big deal.
Yeah, probably better to have a happier, healthier mom and dad that aren't stressed about finances. than maybe an extra couple, 200 square feet in the basement. So yeah,
there are things that you can do. It's like short-term pain, long-term gain. This whole thing is always going to be like this. It's never going to be perfect, right? It's not going to be constantly
except for those boomers, man.
Right. I guess, it could.
Those damn boomers.
Yeah. But, so you've got to weather the storm sometimes. Yeah. It's not always going to be
seasons of life.
Yeah.
So there's opportunity in all seasons of life if you're looking for it. And if you're prepared for it, and you can make measures, to get there. I don't have the answers. Everybody's family is different, but
and I think people maybe are a little bit unaware of what their income could get them now because of rates and all this debt. If you want a $300,000 home, minimum down payment, with minimal debt, $75,000. Income is what you'll need for that.
Yeah.
And $300,000 is around the average that we're seeing around here. So, if you've got 60 plus debts, now we're not even close to that
now
number.
You're buying a condo.
Yeah.
For sure.
So there's an element of being realistic with what you're looking for.
Sure. And migration and stuff into Alberta, although it might soften, numbers of visas and things are being issued in Ontario dropped a lot this month, but Alberta is up 10% in student visas and stuff. Right. So students and people are still coming here, Alberta specifically. So the rental market won't soften as much as maybe other places, which still make home buying likely a goal.
Yeah.
So yeah, Alberta's going to be, I think, riding some good economics
Yeah,
for a while.
for sure.
Yeah. Yeah. Anyway,
But
cool.
leave it there.
Yeah, let's stop it there. It is.
Okay.
Yeah.
All right. Thanks for watching, listening. See you next time.